Hey, Jason here. Today's video, I'm going to answer the question, should you invest in GRWG, pot company GRWG, stock ticker GRWG. This is stock analysis for KeJonah E. Thanks again, KeJonah. You have requested, I don't know how many videos at this point, but thank you for watching and supporting this channel by requesting these videos. Thank you very much. Before I get to that, though, before I get to the actual analysis, I need to let you know you can get this series of podcasts anywhere in the world for free on all major podcasting platforms. Stitcher, Anchor, SoundCloud, Spotify, iTunes, and more. You can get this as part of the I Love Valuations podcast anywhere in the world for free. If you like this video and our other videos, make sure to subscribe and hit the notification bell so you're notified every time we release a new video. We're releasing new videos all the time. Okay, I apologize for this again. I don't want to do this. I have to do this because every time I don't, I get nasty comments. So I do not short sell ever, and I do not own stock in a long position about any stock I talk positively about. So I do not benefit either way from talking negatively about a stock or positively about a stock. The only benefit, or the reason I do this, is to help you learn how to spot investments faster, or spot good potential investments faster, by finding hidden assets, hidden meanings for terms and metrics, stuff like that, and also helping you do the same on the negative side of things by avoiding potential red flags on potential bad stocks. This is based on my preliminary analysis worksheet, which you can get for free below this. I'll talk more about that in a little bit, based on my years of experience. This will help you, or all of doing all this will help you spend less time looking at bad stocks, spend more time looking at potentially good stocks. This I do not consider growth when I talk about stock. I could look at it, what it's doing now, what it's done in the past. Most of the time, I don't know the stocks before I look at them because they're requested by viewers. I purposely do not look at stocks that I don't know anything about before I analyze them here for you, because I don't want their story or anything that they're going to do or that they say they're going to do in the future to bias me in a negative or positive way. That comes later. But on this first stage of analysis, I have to, there has to be a minimum margin of safety that requires high margins, high profits, general balance sheet strength, stuff like that. If it doesn't pass that criteria, then I don't move on. What else? Why should you listen to anything I have to say? In the first 9 years of my career, I've earned investment returns for the portfolios I manage of 23.5% per year on average, not compounded, which puts me just behind the 24.5% or 24.2%, sorry, that Warren Buffett produced in the first 9 years of his career. My returns in the first 9 years of my career legitimately make me one of the best stock pickers in the entire world. So I'm not saying that to brag. I'm saying that to kind of prove to you that I know what I'm talking about a little bit, and to hopefully prove to you that I'm someone that can help you in an honest, open way. Okay, sorry again for putting that in there. Have to do it or I get nasty comments. Okay, let's get to the actual analysis now of GRWG. So I said earlier, I don't know a lot of the times that I do the analysis. Full transparency, I do know this company for one of the investment newsletters I write for. I cover this company, so I know more about this company than I do for many of the companies I talk about. Huge PE here. So again, I don't care much about PE, but that is one sign the company might be overvalued, especially with that being at 105. Huge increase in the year share price from $4.34 a share to $67.75 in the last year. Let me look at the chart. Okay, so this didn't really skyrocket until it's going up slowly over time during the pandemic. Then it started skyrocketing in the last several months. Again, I know more about this company that I'll get into the story in a little bit. Most of the time I won't get into that at all, but we'll do that in a little bit after we do the numbers. Okay, this company owns and operates specialty retail, hydroponic, and organic gardening stores. The firm is a marketer and distributor of nutrients, growing media, advanced indoor and greenhouse lighting, ventilation systems, and accessories for hydroponic gardening. So this is more of a what's called a picks and shovels play. There's the famous saying, and I don't know if this is a saying, there's a famous history lesson, I guess, probably the better way to put it, is the reason these are called picks and shovels plays is everybody who went to the California gold rush in the 1940s, few people actually found gold. Even fewer of those actually became rich after they found the gold. The people who actually made the most money during that time were the people who sold the things that were necessities, like picks and shovels, tents, stuff like that. Food. Those are the people who made the most money during the gold rush. So I love these kind of companies. I love kind of picks and shovels plays because they're necessary in the industry. These, as the marijuana industry grows in the United States, again, I'll get into this after we go through the numbers more, but as this industry grows, no pun intended, grow generation will grow as well because it is, or it sells necessary stuff for growers. Okay. Revenue skyrocketed from $3 million in 2015 to $193 million in the trailing 12-month period. That's fantastic. They are actually profitable. A rare, profitable marijuana company. The kind of stocks I get asked most about, frankly, are either marijuana companies or cryptocurrencies. Those are the kind of investments I get asked kind of by quote-unquote normal people the most, family, friends, stuff like that. Most of the time, I tell people to avoid marijuana stocks because they are hugely unprofitable. This, again, is a rare, profitable, on an operating profit basis, profitable marijuana company. Still doesn't surpass my thresholds. I look for anything above 10% on a consistent basis here. Their highest number is positive 4.4% in the last year. That is a great sign for what's coming in the U.S. Again, I'll talk about that shortly when it comes to marijuana legalization. They've issued a decent amount of shares. Again, not a surprise, to fund growth, to stay alive as they were unprofitable. This is not a surprise in this industry. That they have issued shares, not necessarily a great thing, but as long as they're allocating the capital well, it's not a huge deal. In this case, they appear to be. Book value per share has gone up over time pretty significantly from 27 cents per share in 2016 to $5.42 in the trailing 12-month period. Again, because of the investment newsletter I write for, I am familiar with this industry, and one thing we need to look for on the balance sheet is if this is from goodwill, is this from acquisitions, is this huge increase from acquisitions? What is this huge increase from? My guess would be acquisitions. That's not necessarily a great thing in this industry, again, because I know more about it. But we'll get to that when we get to the balance sheet. For now, generally, the book value per share going up over time is an indicator that the underlying intrinsic value of the company is going up over time, which is a good thing. ROIC, hugely negative again as they're growing. Now it's positive 2.7% in the trailing 12-month period. I look for anything above 10% on a consistent basis. So while good, doesn't quite reach my threshold. Same thing with free cash flow to sales, although this is still negative. I look for anything on this metric above anything above 5% on a consistent basis. Excuse me, just getting some water. This at negative 2.4% does not reach that threshold. Huge amount of cash. They have 50% of their balance sheet in cash. That's a good thing. Intangibles. This is what I talked about with their book value going up. Intangibles. They most likely have acquired a lot of businesses because that's what happens in this industry over the last several years. We'll detail that more when we get to the balance sheet, but that's something to look for. They don't have hardly any debt, which is a great thing. That's another thing that's gotten a lot of marijuana companies in trouble, is they've got over indebted while they're not making money. They can't pay the bills and they get in trouble. This is a good thing. The cash conversion cycle has gone down from 162 days in 2015 to 80 days rounded up in the trailing 12-month period. That means their efficiency has gone up, actually almost doubled, actually about doubled, a little bit more than doubled actually, which means their margins go up, which shows in their operating profit margin going from negative 14.4% in 2015 to positive 4.4%. When the cash conversion cycle goes down, the company generally becomes more efficient, which means they earn, again, generally higher revenues, higher profits, higher cash flows. All of that is very good. Okay, debt to equity ratio again. They don't have hardly any debt, so it doesn't matter. Balance sheet, just open the full balance sheet. So what's the size of the company? $2.7 billion. They have $180 almost billion in cash. Very good thing. Gives them more margin of safety, makes the investment less risky. Okay, goodwill. So their book value going up over time is not necessarily a great thing. Let's go to the annual look to illustrate this. Let's see what it shows. And we are not getting, why are we not getting 2019 data or 2020 data? Okay, I guess we won't do the annual. But over time, this has gone up just in the last year plus from $12.4 million in goodwill to almost $63 million in goodwill, which means they've overpaid, at least in a book value sense, for acquisitions. Why do I phrase it like that? Because goodwill is an accounting number. It shows the excess amount that a company paid in excess of the company's book value. So let's say a company that they acquired was worth $1 billion on their book value basis. In this example that I'm doing, let's say they paid $2 billion for the company. That means the company after acquisition would show a $1 billion, or the company that acquired them would show a $1 billion goodwill fee or number. Let's put it that way. This 99% of the time doesn't have any real world economic value. It's simply what I just said. You overpaid based on the book value for what the company was worth. Is it a huge deal in most cases? Not necessarily, because most companies don't operate off their book value only anymore like they used to. I'm thinking like manufacturing, retail, stuff like that. Most companies nowadays don't operate only off their balance sheet. So it's not a huge deal if they're allocating the capital well. If they're integrating these acquisitions well. One thing I will say, again, because I've studied this industry enormously for one of the investment newsletters I write for, is a lot of these marijuana companies massively overpay for acquisitions. So that is a semi-red flag in this industry. It's not a huge number, so it's not a huge deal. But that is something to watch out for going forward, is the rise in their book value is because of acquisitions. And again, knowing this industry, most of the acquisitions in this industry are massively overvalued and massively overpaid for. So probably not a great use of, probably not a great example of capital allocation here, unless, again, over the long term, they turn it into an advantage. Anything else? Decent amount of debt, $9.6 billion in long-term debt. Not a huge deal. The company is $2.6 billion. And nothing else. They actually have a relatively clean balance sheet other than the goodwill, and even then it's not a huge number, compared to their size, so it's not a massive deal. This is another thing to watch out for with a lot of marijuana companies, stock-based compensation. Because most of the marijuana regulations worldwide have only come down in recent years, specifically in Canada, where most of these companies are based. or most marijuana companies are based. Some are based in the U.S. Most are based in Canada, just because they've pretty much fully legalized it now. They have a lot of stock-based compensation remaining from their IPOs. So again, it's not necessarily a red flag or a positive. It's just something to watch out for, is the stock-based compensation based on the IPO. And here's the acquisitions. They paid about $41.4 billion in the last year plus, or in the last year, from acquisitions. They issued in the last year $211 million worth of stock. Again, not a surprise, which is where most of their cash flow comes from. Pretty much all their cash flow comes from, actually, from that. Again, not a huge deal, not a huge negative, not a huge red flag, just something more to note, because that's very common in this industry right now. And something else very common in this industry is massive valuations. I'm laughing because I don't care much for PE, price to cash flow, or forward PE, but when I do, I look for numbers under 20 there. This is at 410, 762, and 105.3 respectively on those three metrics. And this metric down here, the enterprise value to EBIT, this is the most important number. This shows a company's cash and debt along with their value compared to operating profits. This is the most important number. I look for anything below 8 here, and this is at 287. So these all show that GrowGeneration is massively overvalued right now. Again, not uncommon in this industry. And it also illustrates why, or I kind of knew this coming in, not just because I've studied this industry a lot, but also just looking at the stock chart, and their stock has skyrocketed in the last year, up almost 900% in the last year alone. That's absurd. Their revenue and profits have gone up substantially, but not enough to cover for that. I'm going to bring my face back here so I'm not just talking to a screen. The main reason its stock has gone up is due to speculation that not only has Canada legalized marijuana, more countries around Earth are legalizing marijuana, and the U.S. is likely to legalize marijuana at some point at the federal level. It's already legal to some degree in, I think, 45 out of 50 states in the U.S., even though that's the litigation is on that kind of going back and forth constantly. I think it's legal to some degree in 45 out of 50 states right now, and at some point it will become legal throughout the United States. That's not an if, that it will happen at some point. I don't know when, likely sooner rather than later, because of the democratically controlled Congress and presidency in the United States right now until 2022, the next election. So they're probably going to try to get some kind of legalization, or at the very least decriminalization legislation through before 2022, and they likely lose control of some of the United States government. That's why the stock price has gone up so much. Having said all of that, and that is coming no matter what, it's a what's the phrase? It's a freight train that's you can't stop. Marijuana legalization is coming to the United States. It's coming probably to most countries worldwide at some point, relatively within the next 5 to 10 years. So does that mean great things for GrowGeneration in the future? Probably. Potentially. You don't know. Will it help the company? Yes. To what degree is uncertain. Again, I've studied this industry a lot. And actually down to the price levels in Canada versus the drug dealers and the legal pot that is sold in Canada. When I did that analysis, I think that was probably about a year ago now, the prices for illegal marijuana sold by drug dealers was somewhere in the $3 or $4, or converted $3 or $4 US dollar range. Actually, might be $3 or $4 Canadian. I think it was what it was. And legal marijuana was sold at like $8. I think it was per ounce. When there's that big of a discrepancy, people are still going to buy the cheaper stuff. even though it's not legal. So it's going to take a long time for this to flesh out. There's a huge oversupply issue as well, in terms of marijuana and the demand. The supply of marijuana is going up like this because more and more companies are growing it now that they can legally do it, and earn money doing it. But the demand is going like this. So when you have supply going up like this and demand going up like this, it's not a good thing for the companies. It leads to unprofitability, which is why most pot companies are unprofitable. Leads to massive oversupply issues, massive pricing issues, which leads to massive unprofitability and companies going bankrupt, having to issue shares, having to issue debt, mergers, all that stuff. So yes, this is all coming. I just don't know which marijuana companies are going to win, other than the picks and shovels companies. Scott's Miracle-Gro is another one that will likely benefit over the long term. Grow Generation's one, but to what degree, I don't know. And if they were about fairly valued or undervalued, I might have a speculative kind of bet on them. But because they are so massively overvalued right now, based essentially on hope, that makes me uncomfortable. For those reasons, I cannot recommend Grow Generation right now, based on my criteria, what my investors require. There's too much risk. It's too overvalued. There's too much uncertainty still. And because, again, the massive oversupply issues, the massive price discrepancy in Canada, those same things will happen in the U.S. too. When that becomes legal. Again, all this is coming. This will happen. To what degree, I don't know. Will it be as bad as the oversupply and pricing issues in Canada? I have no idea. But that is very likely, if not a certainty, to happen in the U.S. as things open up in the U.S. And again, that's coming. But it's too early for me to pick the winners, especially due to the valuation, or mainly, pretty much exclusively due to the valuation. The profitability metrics don't reach my thresholds either. That's a big deal, but it mainly comes down to the valuation. It's way too overvalued for me. If you own it already, might be a good investment for you long term. If you are looking to buy now, I would not recommend it due to, again, the valuation mainly and the uncertainty about when the legalization comes, the oversupply stuff that will happen after that, pricing, all that. So I hope this helped. KeJonah, this was KeJonah E. Yes, KeJonah, thanks for recommending this analysis. Another great one from you. Another great company. Love doing these kind of things. If you or anybody else wants me to evaluate a stock, every stock that's on my calendar over here on my other screen is a request from a viewer. If you want me to evaluate a stock for you anywhere in the world, let me know in the comments below. The only stocks I will not evaluate are banks, because I don't evaluate banks, insurance companies, because you have to actually dig into the 10Ks, the annual reports for those, and the company has to be generating revenue. If it's not generating revenue, profits, or anything, there's essentially no analysis. And I did a couple of those, and it was really short, kind of probably frankly boring. So if you want me to look at any company around the world, though, it doesn't fit those criteria, or it doesn't fall in those buckets, let me know in the comments below. If you're watching on YouTube, thanks so much. Make sure to like, love, shares, comment, and subscribe, and hit the notification bell so you're notified every time we release a new video, and release new videos all the time. If you're listening on the podcast, make sure to do the same stuff. Thank you very much. And we'd also appreciate a review, because the more reviews, views, and listens we get to our content, the more people we can help. If I missed anything, if I didn't explain something well enough, let me know in the comments below. If you're looking for more help on to become a better investor faster, make sure to check out our 5 free gifts below. That includes the actual written version of this preliminary analysis that you can do to evaluate companies faster yourself. You can get that as part of our 5 free gifts below for free. You can also get our my book, How to Value Invest, for free at the link below as well. And you can also get our free guide, 7 tips to picking great stocks, 7 times you must sell. You can get all 3 of those for free at the links below. If you're looking for more help from me on how to become a better investor faster, make sure to check out our masterclass information below as well. But until next time, have a great day. Talk soon. Bye.